Hey, good morning, everybody. Today is Friday, July 17th, 2015. My name is Cliff Backus, and this is your daily video market review. Just a quick note, this weekend I will be playing in a 3-day member guest and won't have an opportunity to get to a video market review. And so the next market review will be on Tuesday. That said, stocks started higher and just got stronger as the day progressed yesterday. Trading volume was mixed, with volume on the NASDAQ coming in slightly above Tuesday's levels, while the New York Stock Exchange volume was lower. The NASDAQ recorded a new closing high yesterday, but didn't take out its all-time high, which it set last month. The NASDAQ recorded an accumulation day yesterday, as did the S&P 400 and the IBD 8585. The 8585 also set a new all-time closing high. An accumulation day is when the market moves higher on heavier trading volume than the prior session, and it's a sign of institutional buying. It's this institutional buying that momentum traders try to identify and get out ahead of. Advancing issues bettered decliners by about 5-2 yesterday. The New York Stock Exchange advanced decline line, while looking a little bit healthier in the past few days, continues to look more bearish than bullish. New highs continued to better new lows by about 2-1. Our market timing model is showing a margin signal on both the NASDAQ and the S&P 500. A margin signal is our strongest buy signal and occurs when we have an aggressive buy signal combined with a buy signal. A margin signal indicates that aggressive traders may utilize margin to leverage their portfolios. More conservative traders should be working toward fully invested. The O'Neill market timing model yesterday went back to a confirmed uptrend. As long as we don't add any, our distribution day count is reasonable for a confirmed uptrend. Large capitalization stocks outperformed small yesterday for the 5th day in a row and have the edge on a 10-day moving average basis. This is more consistent with a market in correction than it is with a confirmed uptrend. Our swing timing model is indicating a moderately overbought condition in the market. Although we are aggressively bullish at this juncture, we're getting mixed signals from the market. Caution's advised. Bulls should feel free to put cash to work, but be sure to keep your stops in place and err on the side of caution. What we're looking at here is a list of Moody's 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power in the market is and get out in front of it. So let's see where the strength in the market was yesterday. On a 5-day basis, specialty pharmaceuticals were up 10.7%. The biotech index was up 9.5%. Cruise lines, 6.8%. Transit services, 6.6%. And healthcare supplies, 6.3%. Specialty pharma and biotech just keep on keeping on. They've been a great place to be for the past couple of years. They continue to be a good place to be. We're seeing a lot of healthcare also come on at this juncture in the market. Let's take a look at the Russell 2000. Russell 2000 yesterday again balked at this trend line. Note that this trend line was support all the way up until the beginning of this month, when we violated that support right in this area. Market came down, it made a low around the 1226 area, and then came back up and has been balking at this level of resistance. This prior support trend line now becomes a resistance trend line. We'd like to see the Russell 2000 break decisively through this area and again challenge resistance up here in the 1296 range. Let's take a look at the NASDAQ composite. NASDAQ yesterday was up 64.24 points, or 1.26%. You can see that the NASDAQ closed right at the high of the day, which is a very bullish sign. It also blocked at resistance at its recent high in the 5164 area. NASDAQ closed at 5163. Trading volume yesterday was higher than the prior day, giving us an accumulation day. For you followers of William O'Neill, we are on a confirmed uptrend in the market. We've been on a confirmed uptrend since May 14th. Right now, we have only 4 distribution days on the NASDAQ, which is pretty healthy for this stage of a confirmed uptrend. The NASDAQ is bracketed by minor support down here in the 4888 area and resistance up here in the 5164 range, as we noted before. Right now we are on a margin signal on the NASDAQ, indicating that aggressive traders can utilize margin to leverage up their portfolios. More conservative traders may want to be working toward fully invested at this point. We'll see if the NASDAQ can take out this 5164 area. That's the next major level of resistance, and continue to move higher. Let's see what the S&P 500 is up to. S&P didn't quite have as good a day as the NASDAQ yesterday. It was up 16.89 points, or 0.80%. It also closed right smack at the top of its daily trading range, which is bullish, but it blocked at this downtrend line. The S&P 500 right now is in a downtrend. We see that we established this high in the S&P back in May of this year. We set this low in June. Then we came up and we made a lower high and a lower low. So until we can actually break out of this downtrend, the S&P 500 remains in a short to intermediate term downtrend. Yesterday the S&P closed at 2124. Trading volume was below the prior day and below average. On a solid up day that closes at the high of the day, you'd rather see higher trading volume. The S&P is in a confirmed uptrend and has 5 distribution days in the past month. We are bracketed by support down here in the 2072 area and resistance at this trend line. I'd like to see the S&P break out of that trend, out of that downtrend, by breaking above this trend line and challenging the old high up here in the 2134 area. The S&P also is on a margin signal. Let's take a look at a couple stocks. First stock I want to take a look at is Adeptus Health Inc., which owns and operates 55 freestanding emergency medical care facilities located in Texas and Colorado. Adeptus has a relatively low average daily trading volume. It trades 242,000 shares a day. We generally like to see a minimum of between 500 and 750,000 shares traded a day. But I like Adeptus here. We broke out of this second stage base back in February of this year, and the stock has marched consistently higher. But notice how the stock has respected this 21-day exponential moving average, which we show in pink. Yesterday the stock came down and again tested the 21-day exponential moving average, bounced off of it, on higher trading volume than any down day in the past 10 trading sessions, which is the definition of a pocket pivot. This is not the best place to buy this aggressive stock, but aggressive traders that want to get into the healthcare industry, this may be an opportunity. Last stock I'm going to take a look at, Nautilus Inc. Nautilus manufactures fitness equipment mainly sold under the Nautilus, Bowflex, Schwinn, and Universal brands. The stock right now is putting in this square boxish kind of a fourth stage base, very, very late stage base. Nautilus gets a 72% checklist rating. It has a pivot point of 22.95. Yesterday we got a nice little pocket pivot out of Nautilus, and aggressive traders may want to buy right in here in anticipation of a breakout above the 22.95 level. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.